Okay, welcome everyone to chapter 4. This is financial service using saving plans and payment accounts using the book called Focus on Personal Finance, done by Kapoor, Debbie, Hughes, and Hart. This is 7th edition by McGraw-Hill. Uh, in terms of the what we call it, the copyrights. Okay. All right. Let's start from the beginning. There's about four objectives. The first one to four. Identify commonly used financial service, compare two types of financial institutions. Number three, assess the various types of savings. Number four, evaluate the different types of payment methods. Okay, BUTS is basically on the banking side. We have talking from human teller connecting to Vio. Now is we are using the AI technology. And then from writing check and transferring money using the app. What are the app? It's app like this in your iPhone or your Samsung or your Android iPhone, whatever it is that you use. And then from there, sending the deposit by mail and collecting pictures for to remote deposit banks. Okay, and then from obtaining a loan from a bank to borrowing from peer-to-peer lenders. These are the typical financial institution 4.1. What are the deposit institutions like commercial bank, credit unions, saving and loan association, and mutual saving banks? The then deposit will be like life insurance company, investment company, brokerage firm, credit card company, finance company, mortgage company. Okay, this is the type of financial services in terms of size, check cash availability, saving services, investment service, payment service, credit service, other service, and the other non-financial institution. The other financial providers, also we have that in terms of pawn shop, check cashings, payday loan, rent to cash title on loan. Okay. In managing daily needs, there's frequent mistakes when managing current cash needs include the following. Okay. Overspending due to impulse buying and overusing credit. This is the most common mistake that we have done in the past. I personally also have the same kind of problems: overspending and impulse buying, buying the things that you don't need. Okay, it's just based on impulse. Is that's what you want and then what you need. Okay, what impulse buying is what you do not want. Having insufficient liquid asset and need to pay current bills, using saving or borrowing to pay current expenses. Number three and four, failing to place fund not to need for current expenses in saving account for investment plan. Source of quick cash. The two main choices when you need more cash available, such as liquid saving, examples such as saving account, mutual fund, and other investment. Number two, borrow, such as credit card cash advance or personal loan. Remember the use of saving, increase borrowing, reduce your network, and use your potential long-term financial securities. The type of financial service, such as saving, provides safe storage of funds for future use. Example will be money in the saving account and certificate deposits. Number two, payment service allow you to transfer money to pay expenses and other businesses activities. Number three, borrowing is used by most people at the same time during their lives. Number four, other financial services such as insurance, investment, tax assistance, and financial planning. Sometimes you have a trust agreement. What is the trust agreement? It is basically an agreement that provides for the management and control of an asset by one party for the benefits of another. Okay. Usually, if you are high net worth, you have a lot of cash, assets and cash, you're gonna use trust. This has been done many times and many big high net individuals from Bill Gates to Berkshires to Jeff Bezos. Okay, excuse me. Types of financial services. To simplify the financial service and many financial businesses often consolidated accounts. What are an asset management account? That is the cash management account that provides a complete financial program for single fees. The online and mobile banking and online and through mobile system are used for most financial services. They are more electronic banking occurs as an ATM, which is a computer terminal that is used to conduct banking transactions. The debit card that activates the activating transaction that is also used for purchases, and the first in terms of credit card that you are spending on your own fund rather than in the borrowing money. There's a difference. Okay, the debit card is based on your money. Wireless transaction use cardless ATM access, or usually people use Apple Pay or Google Pay. That's the most common one. Sometimes in China they use WeChat Pay, WePay. Okay. This is the typical banking services. Exhibit 4.2, payment and transfer, access cash at ATM, balance inquiries such as online payment, moving fund among various accounts, person-to-person payment, instant payment to bills if you forgot to pay, tap away when you phone make purchases, and access online images, cancel checks. Okay, this is a typical payment transfer. Deposit can be in terms of direct deposit, paycheck, and government payment, online transfer from other accounts, as well. Take photo of the check deposit, remote deposit. This is what I've done in the past. What happens? My son has a CRA tax return to my address. So, but he lives in Toronto somewhere, downtown there. So he asked me to open up the check from CRA. So I just open up and send the pictures to him, and he directly deposit by using a remote deposit by taking a photo. This is a typical new trend now. Okay. The same thing when I have a CRA account, the return deposit, the tax return, they also does the same thing. Okay, other services as well: direct deposit, transfer, tax alert, apply and receive for the loan, compare current interest rate on loan, check the rates, buy and sell monitor investment, look at the ATM, and accept, shoot the photo storage as well as online support. Prepaid debit cards have become very popular for payments, replace traditional banking service for many consumer, issued by many financial service providers such as bank, credit cards company, retailers. Example would be like Walmart. This is typical. Canadian Tire also has that. Walmart, Canadian Tires, Costco has that financial service credit card. Okay, if you go to Costco, they're gonna force you open up a membership, and then you have to then that membership you're gonna open up a specific credit card which is master that can only be used in Costco. Okay, this is a good example one. Okay, loading ending funds, prepaid debit cards may occur using any following deposits such as cash, check, direct deposit, or online transfer, or app check, photo, or credit card, cash advances. External fees are often associated with this card, resulting in lower consumer debt in some cases. Financial service and economic conditions, several factors influence finances such as changing interest rate, rising consumer prices, and other economic factors. When the interest rate are rising, using a long-term loan to take the advantage of current low rates. Select a short-term saving instrument to take advantage of the higher rates when they mature. That's when the interest rate is rising. Okay. When the interest rates are falling, you use the short-term rate to take advantage of lower rates when you refinance the loan. And select a long-term saving instrument to lock in the earnings at the current high rates if you have a fixed debt. That's the key part, okay? And then, number 2, sources of financial services. Point 4.2, many types of business offer financial services at once exclusive to the bank. When selecting a financial service provider, consider the following question. Where can I get the best return on my savings? How can I minimize the cost of checking and payment service with other fees? Will I be able to borrow money, or if I needed to? That's the key part. That's the questions that is the source of financial service of this objective on these chapters. Okay? And then when selecting financial institutions, you need to identify your important features such as services, fees, convenience, or online mobile. Okay, for college example, that's the key part. The types of account. Step 1 will be in terms of service, the types of account such and then deposit insurance. For fees such as account, minimum balance, loan rates, convenience such as more branches and ATM machine. And then reward programs for online, mobile will be easy of operation, service, and privacy security. And then once you do that, step 2, rank based on the importance of your institutions, okay? A college student, you have a low minimum balance. This is most of the people that will do. A young family, you have a low minimum balance. For older customer, you have cash withdrawal limit and fraud detection notification with large fraud documents. Step number 3, prepare a list of local and national inline bank and include the name of address, phone, website, and service offered. Step number 4, conduct an online or in-person research. Talk with the people who have used various financial institutions. Okay. Step number 5, based on the information collected, decide where to do your business and may use more than one financial institutions. Okay, that's the key part. In terms of Exhibit 4.4 here, selecting once you follow that, you're going to look at the financial institution. For large bank, the benefits are many branches. For example, TD, a lot of branches. The drawback is that limited customer service and higher fees. And then potential security concern as well. For regional community bank, for example, saving and loan, a higher customer satisfaction and strong personal service, but limited number of branches may not be available on the ATM networks. For example, saving and loan may not have the all branches. If you are saving and loan, say in the Mississauga, you may not have when you live in Thunder Bay or North Bay, then you don't have that kind of network. Credit union is the same story. Strong personal service, higher saving rate, but have few branches and may have membership eligibility. And then we have the online banks, fintech company, Neobank. It has a high customer satisfaction and higher yield on saving and limited personal contact, no branches, and may lack the regulation and security concerns. The type of the financial institution, there's a deposit institutions. Commercial banks offer a full range of financial service to individual, business, and government agencies. And we have an organized corporate is an organized corporation, commercial bank such as TD, BMO, CIBC, and then I work for BMO. That's the key, and then also exists several types of bank such as national bank, regional bank, community bank, and online bank. That we just mentioned in the previous slide there. And then there's a saving and loan association, traditional specialized in saving account and mortgage loan. They expanded to offer financial services comparable to those banks. And then we have the mutual saving bank that are owned by depositor and specialized in saving account and mortgage loan. And then they are mostly located in the northeastern part of the US. And then profit are shared by the depositor and usually have higher earnings on saving. And we also have the credit union, our user-owned non-profit corporation financial that are organized for the benefit of their membership. Membership will be much more flexible as of today and have a lower fees and lower loans and high satisfaction level compared to the other financial institutions. For the non-deposit institutions, the life insurance company example, to provide financial security for dependents with various insurance policy, some containing saving and investment features. Some life insurance company offer investment and retirement planning as well. Investment companies such as mutual fund offer money market fund. A same example here, money market investment company like CI Investment in Canada, okay, or Franklin Templeton. Okay, that was a good example. And then they offer a saving investment plan with earning based on investment in various short-term financial instruments, but not covered by federal deposit insurance. Okay, and then a brokerage firm is employ mostly investment advisor and financial planner. And then this is like Edward Jones, okay? And then investors, that's another group, a broker, serve as an agent or for buying and selling stock, bonds, and other investment securities, okay? And then we have a credit card company specialized in funding and short-term retail lending, such as Visa, MasterCard, Discovered, and Diners, okay? And then we have a finance company, which provide loan to consumer and small business. They are short and intermediate term with higher rates and with most other lender charge, okay? Now we have mortgage company that are organized primarily to provide loans for home purchases. We have another one is pawn shop. If you go to the downtown Toronto in the Church Street area, Church Street and Dundas, there's a lot of pawn shop there. They are loan based on the proportional value of tangible item, such as jewelry, antiques, tool, and musical instrument. We use as neighborhood bankers. And then we have another one, we call it the CCO, check cashing outlets. Mostly our financial institution will not cash the check unless you have an account, okay? They are charged between 1 to 20% of the face value. The average cost will be 2 to 3%. And then we have the payday loan company, which is annual interest rate could be as much as 780%. Payday loan company, cash money, easy money, all those are very payday loan company. They have charge a very, very high interest rate. That's why at the first beginning of the class, I put down a video regarding the payday loan. How much is it? Then people get trapped on it. Okay, and then we also have the rent-to-own centers, lease product to consumer who can own the item if they complete a certain number of payments. And then we also have a car title loans. These are people with poor credit but want to use car title as security for capital advantage. This is high interest, often exceeding 200%. So if you see advertising in the TV or radio, come buy this car. No credit check. Credit check is examined. No. No down payment or anything like that. That is gimmick. It's usually interest rate is high, so up to 200%. Okay, this so you have to be careful about that. Okay, then look at the comparing now 4.3, comparing savings plans. These are the typical regular saving account. Usually involve a low or no minimum balance and allow you to withdraw money as needed, offered by banks and saving and loan association and other financial institutions. It's called a share account or credit unions. It has a high saving account that are available with various restrictions for initial deposit requirement and interest rate, and has a minimum balance as well as any possible fees. And then we have a certificate of deposit. Requires a certain amount to be left in deposit for stated period to earn a specified interest rate. There's a time period of CD may range from 30 days to 5 or more years. Most financial institutions impose FI means financial institution impose a penalty for early withdrawal of CDs. Okay, that's the type of things that you need to know. The type of CDs, rising rates such as bump up CDs may have higher rates at the various intervals such as every 6 months. Liquid CD offer an opportunity to withdraw money without penalty, and zero coupon CD which is purchased at a deep discount with no interest payment. Index CD which have an earning based on the stock market. Callable CD which start with higher rates and usually have longer maturity as high as 10 to 15 years. And beware of the promotional CDs. Okay, that's you have to be aware of that. In managing CDs, when first buying a rolling CDs, buying a new one or maturity, investigate the potential earning and cost. Do not allow your FRA addition to automatically roll over your money into another CD for the same term. Consider creating a CD portfolio with CD maturing at different times. Example is 2003-month CDs, 2006-month CDs, and 2001-year CD and 2002-year CDs. Okay. Saving alternatives is a good example. These are regular savings alternatives. You have the benefits of low minimum balance, easy of withdrawal, and insured. The drawback is low rate return. This is usually uh, backed by insurance by the government. In the US, by the FDIC. Canada is also insurance by the Bank of Canada. For money market account, benefits which is favorable, rate of return based on the current rate, allows limited number of checks to be returned and insured money market account. The drawback will be higher minimum balance or regular savings account and service charge lower rate if the below certain balance not insured money market funds. Okay, there's more liquidity here. Which is less liquidity will be like certificate deposit. You have a guaranteed of return insured when purchased bank or compared to financial institution. Basically, there's a limit. There's usually about 250,000 below. If it is above, then there's no there's a problem there. Okay, and then U.S. savings bonds benefits. Let me just go back. U.S. savings bond benefits will be rate varies in terms of interest rate, low minimum deposit, government guarantee. It is exempt from the state and local income taxes. It has a drawback of lower rate and redeem and in the first 5 years. Okay, and then we have the money market account. The money market account and funds. The money market account funds is a saving account that requires a minimum balance with earning based on a charging market level of interest rate. May allow a limited number of checks and transfers, and may impose a fee when my account balance. Guys, make sure, I'm in the middle of recording. Just make sure your is mute for a while. You can talk later, okay? Money market accounts versus money market funds both offer earnings based on the current interest rate, have a minimum balance restrictions, and allow check writing. Money market funds are covered by federal deposit insurance, unlike many market accounts. Okay. Okay, U.S. savings bond. U.S. saving bonds are low-risk saving investment program guaranteed by federal government, such as the EE bonds. The most common will be like $25 here, bought managed online, and must be held for 1 year and before it can be cashed. And then I bond, it just allow you to earn interest based on a fixed rate and on inflation rate. It is every 6 months, a new rate is set and purchase a face value for the amount of starting at $25. Okay. Evaluated saving plan. The selected saving plan is most often influenced by rate of return, inflation and tax consideration, liquidity and safety restriction, and fees. The rate of return, which is the percentage of the increase in the value of savings as a result of interest earned. Compounding is based on a process that calculates interest based on the previous interest rate. Okay, this is the type of return that you will need to know when you do open up a saving plan. The rate of return is number one. Number two will be compounding. The truth in saving, but this is requires a disclosure for the information. This is based on the U.S. Act. Okay, fees on deposit account, the interest rate, and the 1% rate, and the other term conditions. Okay. So selecting saving plan, the key part is the rate of return, inflation, taxes, liquidity, safety, and restriction of fees. These are the highlight of the selecting a saving plan. What is the rate of 10% of increase in value of savings, and then increase in the frequency of compounding? That's the rate of return logic. Inflation means the higher consumer prices result in a lower buying power of interest earned on savings. Taxes will be taxable interest, reduced amount of earnings. Liquidity, which saving can be withdrawn. Okay, basis easy to withdraw. That's basically liquidity. If you lock in your saving CD in CD, like for example, you have to lock in a certain period, so it's not liquid. You cannot cash it anytime. You get to get penalized. Safety is another key point. Deposit insurance. If you deposit below 250,000 in the U.S. and here, usually you got insured. And then there's fees. There are a lot of fees there. Makes things fees are one of the key part. And then interest, let's see, let's go back. This is that it's been covered. Let's move on to the next chart. Compounding frequency affect the saving yield. So the more compounding, the higher is the yield. That's basically what it is. If it is annually, you got 4%. Yeah. If it is quarterly, you got 4.05, monthly 4.07, daily 4.08%. This is based on 100,000, not 100,000, 10,000 with the rate of 4%. The more the compounding period is, the higher is the rate. That's basically the logic is. Give you an exact calculation from year 1 to year 2. This is the annual yield will be 4.08%. Okay. Now look at the APY. APY is the annual percentage yield. It's the percentage rate expressing the total amount of interest that would be received on $100 deposit using 365 period. So the logic will be, this is the logic given to you. APY equal to 100, close bracket, interest divided by principal. So you got 66 divided 100, you got 5.5%. Okay, remember here. What number of days in terms of there's a state maturity is 365, or when the account does not have the stated maturity. The APY formula will be like this. This is the number. This is the APY formula that you need to know. And then in terms of inflation plan, inflation rate increase, interest rate earned also increase, taxes also reduce interest on earning. So in this part of the world, Canada has one of the highest taxes. You have to pay interest on your savings. Liquidity allows you to withdraw money on a short notice without loss value of payment of fees. Okay, safety is often provided using FDIC or NCUI. This is made in the US. Okay, Canada is a Bank of Canada. Restriction of fees may limit to number of transfers as well in terms of withdrawal. So I like me, I have a BMO account. It is unlimited. I have to pay about $15 every month to use unlimited usage. If you choose the lowest one, like say I also have another account in TD. It's about $5 a month. They can only choose up to, I think, 5 transactions. After that, they're gonna charge you $1.50 or $2.50. I don't remember the amount of charge, but it's gonna charge you after a certain limit amount. All right, let's move on to the next chapter, comparing forward objective 4.4. Each year, paper check become a small portion of payment made by checking account. They are still main source of debit card in the online payment. So digital payment will be like debit, online, store value, and smart card, digital wallet. So this also mostly come in like GoPay. GoPay. This is one of the things that being used in Asia. Worldwide as WePay, so WeChat Pay. Checking account uses a regular checking account, active checking account as interest earning checking account. Mine, I usually use a regular checking account. The payment method can be certified check, cashier check, money orders, money transfer service, travel check. So when I remember in the 80s, 50 years ago, when I traveled to the US, I always use travel check because it's for safety reason. Digital payment. So digital payment is a debit, a credit card transaction involve the amount deducted from your checking account or under bank account. This is digital payment, but it is linked to your credit card or debit card. So in this particular case, debit will be debit. Okay. And then online payment is facilitated by bank and online companies. Consumer may use credit card or bank account that make a purchase or pay at a local store. Online payments such as Apple Pay or Google Pay. Mobile transfer, do you use PayPal, Venmo, Zelle? This is the most common one. And a stored value card, which is highway tolls. Easy Pass, that's what a good example. Easy Pass in the US. Okay. Easy Pass. A smart card, also using a digital wallet, which is similar to the ATM card, which is embedded using microchip. Transactions not involving cash, check, or credit card have expanded with technology and improved security and increased consumer acceptance. That's the key part. Okay. Okay, let's do a comparison between credit card versus debit card. For the credit card, delay payment for purchase, build a credit history with wise buying, buy online for major purchases, earn more rewards, points for spending. This is the use of a credit card. For the use of debit card, limit your spending to available money, avoid the bills that will be paid in the future, and avoid interest payment for an annual fee, and obtain better protection by processing credit. So that's the comparison side. And then we're going to look at the checking account. There is a number of three categories here. The first one, we call it the regular checking account. Usually you have a monthly service charge that you may avoid by keeping minimum balance in the account, the checking account. And you have an activity account. Charge a fee for each check written, sometimes a fee for each deposit in addition to monthly service charge. So there's no minimum balance required. So I don't like this account. This is too much. If you are too active, then it's going to be too much for you. It's going to be too expensive. But if you have low activities, this is the one for you. Interest earning checking account usually have a minimum balance. If the balance goes below the minimum required amount, then you may not earn interest and will likely incur service charge. You call it the share draft account or credit union. So this is the most common one, as well offered in by the banks. This is an exhibit 4.9, give you an idea of the restrictions of the checking accounts in terms of minimum balance or link for deposit check. There's also fees and charges such as from ranging from monthly fees to the online banking. And then there's a special service such as direct deposit as well as the ATM as well as overdraft protection. And then you got the interest ranging from the interest rate, deposit, and fees charges. Okay. And then in value checking in payment account, there's a restriction. Most common limitation on check account is the minimum balance to earn interest or avoid service charges. There's fees charges. Compare your earnings with the monthly service charge and consider the cost and loss and reduce interest resulting from maintaining the minimum balance. And also you have the interest, which is the frequency of compounding interest computed method, affect earning and checking account. And then you have the special versus the overdraft protections. And then, of course, you have the other payment method. What are they? They are the certified check. This is a personal check with guaranteed payment. I remember when I want to buy a motorcycle, I'm using a certified check. So I'm using a personal check, but it has to be certified. So it's guaranteed payment. Then we have cashier check, a check that is issued by financial institution. You may purchase by one time by paying the amount of the check plus the fee. The application check is about $25 per issue. And then you have money order as well. It costs about $20 as well. Maybe purchased in similar manner from financial institutions. And then you have the travel checks, allow payment when away from home and were popular before ATMs. Require you to sign in the check twice and first when you purchase again when you use them. Okay. Certified check, cashier check, and money orders allow payment for the recipient knows it's valid, which is, for example, would be used when buying a used car from someone else who doesn't know you. Okay, that's the key part. This is the most part. Okay, those are the things that are being used. Managing your checking account. There's an opening for checking account and making deposit. When opening checking account, you need to decide an account ownership, either individual or joint account. I suggest you have an individual account. It's much easy to do. Joint accounts is much hassle unless you are in partnership with somebody. Making deposit, a deposit ticket is used when adding funds to your checking account. Each check deposit requires endorsement for your signature on the back of the check. And then there's common endorsement form. There's a blank endorsement form. It's just your signature that should be used only when you are actually depositing or cashing a check. Restricted endorsement, however, consists of the word for deposit only followed by your signatures. There's a special endorsement allow you to transfer a check to someone else with the word pay to the others or followed by the name of the other person and then your signatures. And then you have a remote deposit capture allow you to deposit a check with a photo that may require the photo to remote deposit followed by your signature and account number. And then when you're writing a check, okay, before writing a check, there's a proper procedures. Number one, record the date, write the name of the person or anybody or organization receiving the payment. Number three, record the amount of check and then write the amount of check in the words, sign the check and note the reason for payment. That's the key part on writing a check. Make sure it is there, stated plainly. Well, so when reconciling the checking account, you need to do a bank reconciliation. Okay, when I was in the Royal Sun Alliance, there's one, and the financial analyst just doing a bank reconciliation, day in, day out, day in, day out. Every morning she just do a bank reconciliation. Whatever the payment is being made, a check is made, and to other people, she has to reconcile. Whatever check is received, she also has to reconcile. Make sure the amount received and paid are the same. Not only in the books, but also in the banks. If there's discrepancy, then you have to check with the banks to what's going on. Okay, there's quite a number of fake check. So we managed to actually find those things and handle that things kind of stuff. So it basically accounts for the difference between the bank statement and your checkbook balance may be accomplished with the following steps. Compare the check, written, and those reported. Okay. Number two, determine whether a deposit made are not on the statement and add any kind of discrepancy or deposit to the bank statement balance. And then three, number subtract the fees and charge the statement, the attempt withdrawal from your checkbook balance. And then number four, add any interest to your check balance. So that is a lot of things. This is not an easy one. Reconciliation is very detailed and meticulous, okay? And sometimes very time consuming. You have to make sure if you pay 1,000, the balance will be 1,000 as well in the bank records. The bank records and your book record must match. If not, there will be a problem there. This is a typical bank statement here. Bank balance 920 subtract minus outstanding, and then deposit transit $200. This is 93. Okay, your bank statement. Your checkbooks showing up like this, different, but it has to be adjusted. The same thing. Okay, that's basically what it is. Give you an idea. This is show you an reconciliation. It's not an easy task. It's meticulous and has to be in detail. If you are not detail oriented, don't do this kind of job. It has to be detailed. You have to make sure that it has to match up to the penny levels. That's the key part. Guys. Okay, look at this. Look at this chapter summary. Number one, which is identify the commonly used financial service, financial products such as saving and plan and checking account, loan trust service, and electronic banking. Okay, and number two, objective number two, compare your type of financial institution from commercial banking to mutual savings bank to life insurance company, as well as finance companies. Okay, summary number three. Various types of saving. There's usually include regular savings, certificate deposit, interest earning, checking account, money market account, and money market fund, as well as saving plan. Okay, and then number four, evaluate your different types of payment methods from debit card, online, mobile payment, and store value card, and increase in value payment. And regular checking accounts such as activities and interest checking account that could be compared in such a balance. Okay, so that's basically conclude this chapter. This is the end of the chapter 4. I will upload this in YouTube and add puzzle for your interactive learning. Thank you, everyone. Bye-bye.